Hey everyone, welcome to Coffee with Eddie. Let's go inside and see who's waiting for us. Hi, welcome to episode 2 with Coffee with Eddie. Last week we spoke about the difference between internet lending and using a local lender. Today we want to take that one step further and talk about conventional financing versus FHA financing. And again, our guest today is Cheryl Carroll from NYC Mortgage. Cheryl, welcome back to the show.
Hi Eddie, thank you.
So Cheryl, if I'm looking for a mortgage, how do I know what best suits me as far as FHA lending is concerned and conventional lending is concerned?
Go see a local lender.
Go see a local lender, right? So that's a drawback to our first show.
Right. However, there are some very distinct differences between FHA and conventional. Many people think FHA stands for first-time home buyers. It does not stand for first-time home buyers. It's Federal Housing Administration, and it is less money down, a higher seller contribution toward your closing costs and prepaid. There are some pros and some cons. If you put down the 3.5% only, mortgage insurance will never fall off. It stays on forever. There's an upfront mortgage insurance premium. If your credit score is a little iffy or your credit's a little iffy, if you don't have a lot of money to put into the deal, FHA is probably the way to go. So
you had mentioned mortgage insurance. Does mortgage insurance also exist on conventional mortgages?
Yes. So on conventional, you want to have a higher credit score typically. Because rates are based on credit score, down payment, type of property. There are different factors that FHA does not have. So conventional does not have upfront mortgage insurance, but it does have a monthly mortgage insurance premium that will fall off when you get to that percentage of equity in the home.
And with a conventional mortgage versus FHA, can they still have seller contributions to help with the purchase?
They can. It's typically not as much. So for instance, a $100,000 home, you can ask for up to $6,000, 6% on a $100,000 home. You're not going to need $6,000 on a $100,000 home,
Sure.
but you are allowed to ask for up to that.
So what does that 6% cover, or 3%, whatever they ended up using?
Right. Well, conventional is 3%, right, and then FHA 6%. It can cover any closing costs, or prepaids, meaning your homeowner's insurance, prepaid interest, title, appraisal. All of those fees can be rolled into what's called closing costs or prepaids. Your down payment is the responsibility of the buyer.
Sure. And then finally, so there are no seller contributions that go towards down payments, though, correct?
Okay. Cannot happen.
All right, great. Well, for more on this topic and to try to find out more what you qualify for, I highly recommend that you call Cheryl Carroll over at NOI Insurance. Thanks for tuning in for episode 2, and we'll see you next week.